Hey, World Decoders. Is China's economic bubble finally about to burst? We just got some new data from the World Bank that gives us some clues. Now, we've been warning you about China for a while now. The world's second largest economy is facing some serious challenges, and many people are getting nervous that China could collapse and take the rest of the world down with it. Now, these concerns are not new. We've been reporting on them for quite a while. But recently, things have been escalating, and the situation has become increasingly dire. So, in today's video, we're going to look at the latest developments, analyze the data, and try to answer the question once and for all. Is China about to implode, or will it manage to weather this storm? Let's get into it. Here's what you need to know. Key point number 1. World Bank data shows that China's debt-to-GDP ratio hit 300% in 2025. This is up from 260% just 2 years prior and the highest level ever recorded. This surge was mainly driven by the collapsing real estate sector, which accounts for a quarter of China's GDP. Last year, the entire sector was shaken up after one of its biggest players, Evergrande Group, failed to pay back its debts. This event sent shockwaves throughout the Chinese economy and beyond. Evergrande's collapse led to a wave of defaults among other property developers, including KSA Group Holdings, Sunac China Holdings, and Yuzu Group. These defaults have had a ripple effect on the wider economy, causing a slowdown in growth and raising concerns about financial stability. In fact, the situation has become so dire that China's central bank has stepped in to try to stabilize the markets. They've lowered interest rates several times over the past year in an effort to encourage lending and borrowing. But so far, these efforts have not been very successful. Now let's talk about key point number 2. Evergrande's fallout has slashed property values by 25%, wiping out billions of dollars in wealth and shaking consumer confidence. This plunge was triggered by the company's failure to repay its debt, which led to a liquidity crisis and a sharp drop in sales. As a result, homeowners have been reluctant to purchase properties from developers whose solvency they are not sure about. And this has led to a sharp decline in prices. In fact, this issue is so widespread that it has become a common sight to see unfinished buildings standing empty across the country. These abandoned projects are a stark reminder of the challenges facing the real estate market and a sign of the broader economic uncertainty. Moreover, the impact goes beyond just the real estate sector. As the property market continues to struggle, it is likely to weigh on other parts of the economy, such as the construction industry and related businesses. And now let's move on to key point no. 3. This turmoil is not just a problem for China. It could also affect the whole world because China is a major player in global trade. When its economy slows down, it can have a negative impact on other countries. For example, recently, China's imports dropped by 10%, which means they are buying less stuff from other countries. This is worrying because China is a big customer for many countries, especially those that export commodities like oil and minerals. Some countries like Australia are already feeling the pain as their exports to China have fallen, and this is likely to continue if the situation in China does not improve. And now let's talk about the 4th key point. After seeing these numbers, you might be wondering, how can China get out of this mess? Well, Beijing has unveiled a massive stimulus package worth $1 trillion in an effort to boost lending and spending. The plan is to inject money into the economy to get things moving again. The government is hoping that with more money in the system, businesses and consumers will start borrowing and spending more, which will help to stimulate growth. Additionally, the central bank has been lowering interest rates to make it cheaper for businesses to borrow and invest. However, there are concerns that this approach may not be enough to turn things around. Many analysts argue that the government needs to do more to restore confidence in the markets and encourage investment. Others argue that the stimulus measures are too focused on short-term fixes and do not address the underlying issues. Only time will tell whether these efforts will be enough to pull China out of this mess. Now, before we move on, let me ask you a question. What do you think? Is China's economy on the verge of collapse, or will it recover? Share your thoughts in the comments below. I'd love to hear your perspective. As China's economy continues to deteriorate, there are growing concerns about its ability to repay its massive foreign currency debt. This has led to speculation that the Chinese yuan may soon be in trouble, possibly even collapsing. If this were to happen, it would send shockwaves throughout the global financial system with far-reaching consequences for economies worldwide. The situation is further complicated by the fact that China holds a significant portion of the world as foreign exchange reserves. A devaluation of the yuan could have a significant impact on the value of these reserves, potentially leading to a financial crisis. To understand the potential impact of a Chinese yuan collapse, we must first understand the role of the currency in the global financial system. The Chinese yuan is the official currency of China and is the 8th most traded currency in the world. It is also the 2nd most held currency in reserve after the US dollar. A collapse of the yuan would have a significant impact on China's economy and the global financial system as a whole. One of the most immediate impacts would be felt by countries that trade with China. If the yuan were to collapse in value, it would make Chinese goods and services significantly cheaper for foreign buyers. At the same time, it would make imports into China much more expensive. This could lead to a significant shift in global trade patterns. As companies seek to take advantage of cheaper Chinese goods, a collapsing yuan would also have a significant impact on China's foreign exchange reserves. China currently has the world's largest foreign exchange reserves, holding over $3 trillion in assets. However, if the yuan were to collapse, the value of these assets would plummet, leading to a financial crisis, both for China and the global economy. But it's not just trade and reserves that would be affected by a collapsing yuan. Investors would likely scramble for safer assets, leading to a sell-off in the Chinese currency. This could trigger a vicious cycle where a falling yuan leads to further sell-offs, accelerating the currency's decline. Now let's talk about the impact on the global economy. A collapsing yuan would likely trigger a chain reaction throughout the global economy. Other emerging market currencies could collapse as investors seek safer investments. This could lead to a global financial crisis with far-reaching consequences for economies worldwide. While a complete collapse of the Chinese yuan seems unlikely, the currency's future remains uncertain. The Chinese government has been working to internationalize the yuan, but has faced challenges due to a lack of transparency and concerns about the currency's value. Only time will tell what the future holds for the Chinese yuan, and how it will continue to evolve in the global financial system. Now let's move on to our final key point. As we've discussed, China's economic troubles have far-reaching implications that extend beyond its borders. Its struggles are intertwined with the health of the global economy, and its currency plays a crucial role in international trade. While a total collapse of the yuan may seem unlikely, the challenges it faces are significant and require careful attention. We've seen the impact of a weakening yuan on global markets, and the potential for further instability is a concern for all investors. As we navigate these uncertain times, it's important to stay informed and prepared for any eventuality. By staying up to date on the latest developments and trends in the global economy, we can better position ourselves to weather any storms that may come our way. So what should you do now? First, diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different asset classes, industries, and geographies to reduce your exposure to any single investment. Consider investing in assets that are less correlated to the Chinese economy, such as gold or US Treasury. Second, keep some cash on hand. Having some cash on hand can give you the flexibility to take advantage of any investment opportunities that may arise during times of market volatility. This can be especially helpful if you have a long-term investment horizon and can stomach the risk of short-term fluctuations. Third, don't panic sell. It can be tempting to sell all your investments and pull out of the market when things seem to be going south. But generally, this is not a good idea. Studies have shown that panic selling often leads to lower returns and can actually exacerbate investment losses. Instead, focus on the long term and consider holding onto your investments. Fourth, consider investing in short-term bonds. Short-term bonds typically have maturities of less than 5 years and can provide a steady stream of income without the risk of long-term interest rate fluctuations. This can be a good option for investors who want to diversify their portfolios and reduce their exposure to stocks and other riskier assets. Fifth, stay informed. Keep up to date on the latest developments in the Chinese economy and the global economy more broadly. This can help you make more informed investment decisions and avoid making any rash moves based on fear or uncertainty. You can stay informed by following reputable news sources and financial analysts. Remember, weathering any economic storm requires a combination of preparation, patience, and a clear-headed approach. By following these tips, you can help ensure that you are well positioned to navigate the challenges ahead and come out stronger on the other side. Thank you for joining me today. I hope you found this information helpful. If you did, please give us a thumbs up and subscribe for more insights. And remember, if you want to learn more about the global economy and the latest developments, stay tuned for more updates. Until next time, stay safe and keep decoding the world together.